I'm here, as Jenna said, to introduce the Digital Securities Initiative, which is a new project aimed at addressing an enormous number of problems with tokenized securities. When I say tokenized securities, I'm talking about tokenized Apple stock and S&P 500 indexes, things that are publicly traded securities we're used to today, existing in tokenized form. Up until 4 or 5 months ago, I thought it was going to take quite a long time before we would have these sorts of tokenized securities available publicly on chain for retail users to access. But I've been proven wrong recently, as 5 or more companies are issuing these products already. These products are mainly being issued offshore. So it's an interesting route that I didn't think about, where they work just like stablecoins. So you can get tokenized Apple stock, for instance, and once the token is issued, it's freely transferable to anybody with no whitelisting or KYC. So we see some tokenized securities in the US that are limited to qualified purchasers, for instance, but these are actually available in DeFi. And so on the one hand, that's pretty cool and exciting. I'm excited by that. But you have to kind of wonder, is that going to lead to a conflict with the SEC? And I think that it might. Because there's a number of really big unanswered questions in how we really want to do tokenized securities. For instance, one big one that comes up anytime in all the conversations I've had with folks at the SEC about this, for instance, is just the question of KYC. In the current system, if you own Apple stock in your brokerage account, your broker is required to have your information and know, the end holder of every single security. So if we're going to allow people to hold those same securities on chain, is there going to be a need for KYC? Some people would say yes. But at the same time, if you add a KYC requirement to tokens in DeFi, that might cause DeFi itself to not really work. The way that smart contracts and composability work, if there's KYC attestations at every level, that could basically cause the whole thing to not function how we're used to. So that's one example question. We have about 12 example questions that really need to be sorted out. And so in thinking about this challenge of can we adapt to a new technological paradigm, I've wondered, is that even possible? Is it possible to change the enormous number of regulations within Reg NMS and so on to accommodate this new way of doing securities? And the answer is actually, I think, yes. And there's an example from history that I want to tell you about that I find fascinating. In the late 1960s, there was a period of time where stocks were still transacted back and forth with paper certificates. And the volumes got so high that we just no longer had the bandwidth to transfer them back and forth anymore. This was called the Wall Street paperwork crisis. And actually, in 1968, for the second half of the year, the SEC decided to just close the stock market on Wednesdays. So you could trade on Mondays and Tuesdays. On Wednesdays, we just spent the day catching up on paperwork. And then Thursdays and Fridays, you could trade again. That's how bad it was. And in response to this situation, everyone could see that switching to a computerized system was probably the right thing to do. But it wasn't an obvious thing. How would you do that? Whose database would you trust? How would that all work? And it was the Banking and Securities Industry Committee that came together and spent 2 years doing really difficult work, talking to all sorts of constituents, doing a lot of deep thinking to figure out the system as it exists today. They came to decide that the depository trust company would be the main company that we would trust with all of this, and everything followed from that. But laws had to be changed in all 50 states to make it legal to hold a stock not with a paper certificate. Like, a lot of things had to change to make this possible. So we've seen it happen once before, and I think that's proof that it's possible to do it again. And so the Digital Securities Initiative, I think, is most analogous to the Banking and Securities Industry Committee, but for the modern day, for the crypto ecosystem and for digital securities specifically. And let me tell you about just one other example problem. Consider if you had tokenized securities issued on Ethereum. Let's say you had 100 different issuers, and there's a contentious hard fork of Ethereum. Well, let's say now you have half of these assets that exist on one side of the fork, and the other half exists on the other side of the fork. You have 2 copies of every DeFi application, but each smart contract now only has half as much value in it as the users thought that it had before. And so you can see that this could cause like a total explosion to how the DeFi market works if tokens could suddenly become non-redeemable in the case of a fork. And again, this is just one of many problems. So the Digital Securities Initiative is It's a voluntary collaboration amongst organizations who have an interest in sorting this out. It's not a new member organization, so we don't charge dues to participate. Anyone can join the conversation and start contributing their thoughts. And the more interesting your thoughts are, the more we'll include you in further meetings, and the more you can influence the policy and regulatory positions that we end up putting out. It's initially founded and sponsored by Confusion Capital, my company, and Confusion Capital has an interest in this, not because we're a tokenizer or we don't have any interest in any tokenizers. We're focused on the DeFi ecosystem, and we have a vision in the long term that involves all the world's assets being tokenized. And so the conversation so far has included a couple dozen people and organizations in the crypto space, and of course folks at the SEC. And this week we're officially launching, we're turning these series of conversations into a coherent organization, and that's what we're here today to announce. And the main thing I want you all in the audience to know, if you're interested in this initiative, is that we are hiring. So we have 2 open positions. One is looking for a securities lawyer, someone ideally with some SEC experience. And the second is just looking for an extremely creative, inventive person. We want these 2 people to work together to drive this process forward, in addition to all of the advisors and consultants and other participating organizations that are part of the conversation. So if you find that interesting, or if anyone you think would be a good fit for that role, please refer them to us. You can find out more about the initiative at digitalsecuritiesInitiative.xyz. And we have a booth right out there with a white tablecloth, so if you'd like to learn more, feel free to come talk to us during the cocktail hour, which I believe starts right now. Thank you very much.